Welcome to my morning report on Monday, the 1st of February, with me, Rich Perry, market analyst at Hantech Markets. The European trading session has got off to a fairly negative start, and that's come amidst a little bit of a hit to trading sentiment on the back of further declines on the oil price, but also the PMI data out of China, which came in today, which was just a bit disappointing, actually, really, wasn't it? I mean, it continues to remain in contraction territory. There was a mixed. There's two versions of the PMI: the official data and the unofficial Cajun data. The official data was slightly lower than expectation at 49.4, but the Cajun data was slightly higher than expectation. So sort of reasonably mixed, but still in contraction territory. And that fact that it's in contraction territory is just generally continues to remain a big drag on sentiment, and the oil price is lower, and equity markets have were initially higher, but then just reacted lower since then. You've had the eurozone data out as well. The eurozone data was reasonable. The flash PMI data was 53.2, and that was subsequently confirmed by the final PMI at 52.3. Sorry. And so that was no change there on the PMI. But also we've had the UK data, which actually came out pretty strongly. UK PMI, which came out at 52.9, which was well above the 51.7 expectation. But all these PMI data will sort of be a mover on markets today. And the big one that we're looking out for is the US, which is the ISM data, which was actually 48.2 last time out. So that was well below that 2012 low. Actually, the lowest since we've seen since 2009. So that just reflects the problems that the manufacturing industrial sector is going through at the moment in the States. And it'll be interesting to see what impact that data will have on market sentiment this afternoon. At the moment, we're seeing just a relative sort of settling, but look at that 10-year Treasury yield for the States spiking lower on Friday afternoon on the back of that move from the BOJ. Back at lows not seen since August and October last year, so real decline in growth expectations there as the investors continue to pile back into treasuries. Similar sort of story on the 2-year as well. And it sort of questions, certainly, I think, the potential for the US to do another rate hike in March, and certainly it doesn't seem as though that the market is expecting a rate hike in any way at all there. So what we have got at the moment is that move from the BOJ, which drove investors or traders back into the dollar on Friday, just settling down a little bit today. In terms of movements across forex markets, we're pretty mixed actually. Not too much in terms of direction. I'll talk you through the euro and the some of the others in a bit, but certainly it seems to be fairly mixed. You've got a bit of support on gold, and I'll talk you through that as well. But my chart of the day is the DAX. Now the DAX has been probably, if I go onto the daily chart, sorry, to start with, probably one of the best exponents of Fibonacci I've ever seen as a technical analyst in terms of key market turning points. The key Fibonacci levels on this DAX chart have been just incredible. Of the big October 2014 to April 2015, so sort of 6 month rally that it saw as the ECB engaged in quantitative easing. The retracements of that rally have just been unerringly accurate. Incredible. Caught the August low, the September lows, caught these highs here on the 50% fib. Look at the 23.6% fib catching that December high. The January high caught at 38.2%. The January low caught at 76.4. The recent consolidation is now happening around the 61.8% fib level. It is incredible, and that is a level that obviously I'm now looking out for as a key sort of turning point. If we break above that, obviously then the next fib level is 50% above. 50%, which is 10,373. So that key resistance around Thursday's high last week, 9905, is really strong resistance now. But that was also a bearish engulfing pattern, which sort of certainly just stopped the rally in its tracks. Really, you've seen the momentum indicator starting to roll over. Interesting that you've got a negative cross on the stochastics already. The MACD basically just unwound to 45, so just unwound to a neutral position where, if that is the case, then that would be a good point at which to sell, isn't it? So the DAX is struggling on this technical recovery. We've got this, the near-term negative signals which are beginning to come through. You had this nice strong candle on Friday, but again being negated today, almost 1% lower on the day today. So really is struggling, I think, to really break through this resistance. You can see here 98.10 on the hourly chart. What a big pivot level that's become. 98.10. They're catching all those lows from early January. Reaction highs subsequently since then have pretty much folded or failed, started to roll over around that level. And again today, the resistance coming in at 98.27, so again around that 98.10 mark where the resistance comes in. So it's a real struggle for the DAX to continue this momentum, and it seems to be sort of rolling over. And you're far more neutral on a near-term momentum basis rather than having previously been more positive. It's now neutral. You're sort of seeing this this DAX chart building this range really between sort of 9.6 area and 9.9, I suppose. And again, that is where the that resistance comes in from that 61.8% fib. So really, really interesting consolidation we've got going on the DAX at the moment. And I think as this week progresses, that 9.6 to 9.9, that 300 tick range, is going to be a really important sort of breakout for the near-term outlook. Confirmed break to the downside. We're testing the lows again. Above that, you're sort of looking out for this retracement back towards this 10,165 resistance, and possibly even that 50% fib level again. So very, very important breakout we've got at the moment with this consolidation ongoing at the moment. So the DAX could be an interesting one this week. So I wish you good luck in your trading, and I'll speak to you later. Thank you.